So it's happened. You made a forecast in the market and the day has arrived in your chart. Now what do? Especially if the market's not right where you expect it to be because of the forecast. That's what we're talking about here today, how to trade the day of forecast. Before we get to the charts, important reminder that trading and investing can be extremely risky business. Therefore, it's your responsibility to evaluate any information, opinion, advice, or other content contained in this video. So let me show you what I mean here using my baby, the E-mini S&P 500. So here we have the current front month of the ES contract. And you can see I have marked some recent Fed rate changes because they were picking up again after a long time. Now, whether you're seeing this information here very close to the time that this market action is happening, or you're seeing it out in the future, there's a couple important things to remember if you're trading forecast. Now, what is a forecast? It's the meeting of price and time. So notice I have a forecast marked off here. The intersection of these two purple lines is the forecast. It's like a magnet pulling on price, attracting it to that price at that time. So the forecast is for today, and you can tell because there's no price action after what I'm showing you, we're on the current day, and the target of that price is 403.375, right? So the way you can come up with a forecast, just like I did, I fully teach in the loss forecasting trading system. And this works great in bear market conditions, bull market conditions, doesn't matter what you're in. So we're sitting here and you can see the daily chart of the ES. We're before the open and the daily chart of the ES is still relatively tight within yesterday's range. So the first thing you want to do is look at what is price telling me, because no matter what a forecast may be predicting, in this case, you need expectation of a high to form, that's all well and good, but it needs to be confirmed by the price action. So that's where you could go to your intraday charts and look at, well, what's the current price action that is tied to this? And I detail this for my Skinny in the Markets members multiple times a week. In fact, the current report highlights are sitting in my free tribe portal for members right now. So number one is, well, what is the current price action telling me? What is the current trend of price? And I can tell you that it's still up, but it's going sideways now on the 60-minute chart. The next thing you want to look at is what are the key price floors and price ceilings that are present. So that would be going in and looking at what is surrounding the price action to determine, well, what barriers does the current price action have to get through to get to the forecast? Or what would it be breaking away beneath, in this case, that would reduce the likelihood of reaching the forecast? So just a quick look at the daily chart here, we can see that there is resistance at yesterday's high, 3948. So that's there out of the gate. There's also today's current low at 388575. So just on that level, just looking at the most recent bars, today's low, you can see, all right, well, there's some support and resistance we need to monitor. Now, the last most important bit here, after looking at what the price action direction is, looking at what levels there are shaping the action, is to come back to your trading plan. That's right. It's not about the technique or strategy at the last point of action. That's about coming back to your plan and seeing what your plan says is acceptable risk to reward if you see a trade opportunity, how you would be managing the trade if it gets filled, and more. So in my trading plan that I use for the ES futures, I have a version of it that I use in my futures trading lab. And in that futures trading lab, what I would do is I would look for smaller signals on the 3-minute time frame, or with recent market volatility, I've even been pushing lower into seconds charts, each bar representing 15 seconds. And I would use the smaller signals, whether it's forecasts or other price support, price resistance discovery methods or more, to help me trade within the direction of the larger forecast, you see? So there you have it, guys. You've got to know the direction of the trend, know the direction price is in, no matter what the forecast is saying. What is the direction now? Step one. Step two is finding nearby price ceilings, that's resistance, or price floors, that's support, that you can monitor to look at what price has to move through to get to the forecast if it's not already there. And number three, most important of all, is to relate it back to your plan. Now, one more point about your trading plan. If the ability to trade this forecast and go to that more granular level is not in your trading plan, then it's something for you to work on. But the thing is, you don't change your trading plan the morning of a trade or during the window of trading. You change it outside of trading hours. So you can reserve that depending on your trading, whether you're a day trader or swing trader. That's the evenings and the weekends, or a break after the morning, whatever it is, it's your time frame. So this is hot, timely, actionable information for those of you looking at the market right now. And this is a great lesson to come back to remind you how to manage a trade, how to take action the day of a forecast. So we'll see what the market shows us. Right now it's sideways on the 60-minute chart. And like I said, I have that all detailed in full in the highlights of the latest Skinny and the Mini report in the Tribe portal. But either way, even if the forecast isn't hit precisely, guys, my methods, my loss forecasting methods, teach you how to profit from a forecast even if it's missed. And that is extremely valuable in itself. All right, remember to subscribe, like, comment, and follow. I'll catch you on the inside. You can sign up at the link to get my hot, timely, actionable updates as soon as I publish right to your inbox.